You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Thursday, 17th day of October, 2019. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. Let me put up a chart of the S&P 500 E-mini futures. Yeah, there we go. Let's go to the daily chart. Okay, we'll talk about that in a second. But if you can't see this chart, go to our homepage at CFRN.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that'll give you one-click access to the show each and every day. On the days you're out of the office or away from your desktop, just point a browser, any browser, to YouTube. I'm going to get it right today. Y'all ready for this? If you're out of the office, away from your desktop, point your browser, any internet connected browser, cell phone, tablet, the computer at the library. Point it to eminitrainingschool.com/live, and there you'll find a live, real-time simulcast of the show, brought to you by the good folks at YouTube. Thanks, YouTube. Now, let's see if it's actually working today. Maybe it is, maybe it isn't. We're about to find out. eminitrainingschool.com/live. /live. My goodness, I just heard myself say /live in my real-time simulcast of the show. Well, that's just a super. That's super, as Granny Reeves used to say. All right, so there you have it. Now you know. And I think I'm going to have to update the link daily. I'm not supposed to have to, but if I do, for you, I'm going to do it. All right. So where are we on this fine Thursday, Fall Thursday? Okay, rolling sideways here. Now, what's significant about this area? Well, a couple things. If we do a Fibonacci price extension, as we did yesterday, we're right up against that 62% Fibonacci price extension, and we are right up against this previous swing high, 30.12 1/4, and today the high is only 3,008. But that's the obstacle we're currently dealing with. If we can get through that area, then we have another obstacle to deal with, and that would be well, there's a high, another high, and another high. So there's a triple top there. So if we get through this, if we can squeak through there, then we have to deal with that. And once and when we get through that, we'll have to deal with the all-time historic high. Okay, that's the deal. 100% Fibonacci price extension would take us all the way up to about 3,100. 3,000 on the S&P is the current big deal. Getting above 3,000, holding 3,000 on a pullback. So I don't suspect this 3,100 to come in the next couple of days, but in the next couple of weeks is certainly a possibility. And you have to embrace all possibilities, because with the market, anything can and does usually happen. Whenever we get locked into one of these high-level battles between buyers and sellers, and when you're approaching an all-time historic high in a market, there can't be any more intense high-level battle between the buyers and sellers. And what that battle looks like on a smaller time frame is this right here. You break out of that skirmish and begin to advance the war effort. Don't particularly like war terms or military terms, but it seems to fit. I don't like military terms or gambling terms when I'm talking about trading, but there's certain situations where they just kind of seem to fit. I don't like the military terms because I don't like to think of the market as the enemy. I would much rather see the market as my business partner. It makes going to work each day a little more pleasant. So we struggle back and forth. Buyers come in and run it up, sellers knock it down. These are 30-minute candles, by the way. Buyers run it back up in your face, sellers slap them right back down. Buyers say, we're not giving up yet. Sellers say, well, you might as well, and they push it down. And then that range tightens. Then all of a sudden it explodes. You break loose, and you think, woohoo, here we go. This is it. Off to the races, headed to the all-time historic high. Sellers show up, and what do? They knock it right back down into the thick of that previous battle. So the buyers advance their position, pull back, advance a little more, and then the sellers lob in something, and here we go. Right back. I can't count the number of times that we've opened the show and price was inside a weekly trading zone, which is all of 1 point on the S&P. But here we are. Often we close the week in a similar situation. So what's happened since October the 15th at 8 p.m. Eastern? Not much, because we're in the same spot. All right, so we'll talk about that and much more when I come back. I got one little bit of news here for you. Data from Coin360 showed a Bitcoin behaving more like the pound sterling today, gaining 1.3% against the dollar to trade above 8,000 at about 8,100. Previously, its trading range had remained under the 8,000 boundary since arriving there on Wednesday amid heavy selling pressure, as has become characteristic of Bitcoin in recent months. Sudden moves up or down continue to produce local volatility, with the Bitcoin against the US dollar retaining its new support for only hours so far. As Cointelegraph reported, political upheaval, including Brexit, has swayed Bitcoin momentum this year. Now traders are beginning to appear more buoyant about the future. Bollinger Band inventor John Bollinger said he was eyeing the potential for Bitcoin to present a midterm head fake, where the cryptocurrency moves in one direction and suddenly reverses. Bollinger wrote in a Twitter post today, wait for it, ... Others also entertained the idea of a U-turn. Regular Cointelegraph contributor Michael Van Poppy said it would be a personal point of amusement for him if traders waiting to buy in at lower levels were left hanging by a reversal before 7,400. Interesting market dynamics, he told Twitter followers today, amid rumors that buyers were waiting for Bitcoin to dip below 6,000 before stepping up to the plate. So there you have it. A little bit of news from the crypto world. Let me go over the numbers with you real quick from around the world. Now these are the cash markets, the indexes. We're going to start here in the US first. Let me pull in some fresh data. All right, currently the Dow down 19 points. NASDAQ up 14. S&P 500 up 4. And the Russell 2000 up 11.5. In the commodity basket, crude oil down 40 cents, trading 52.96 last. Gold up $5.50, trading 14.99 last. In the Asian markets at the close, Nikkei posted a loss of 21 points. Shanghai lost a little over 1 point. And the Hang Seng gained 184. And in the European markets at the close, FTSE was up 14, DAX down 15, the CAC down 23. Now, the common thread amongst all the markets, global markets, no movers, no shakers. That's another characteristic of approaching an all-time historic high. Everybody's standing at the gate. If you've ever been to the horse track, imagine the horses at the gate. The bell's about to ring, the gate's about to fly open, and they're all nervously twitching and looking left and looking right and looking left and, jockeying for that opening position. Who's going to move first? That's what we're dealing with. Unfortunately, and we know this from previous experience, and you've experienced it with us here on this radio program over the years, this type of activity, this type of behavior, unfortunately, it can drag out, not only for days, but for weeks. We hope it doesn't. It's not a requirement. It's just what we've seen happen in the past. So we'll stay alert, we'll stay nimble, and we'll trade whatever the market puts in front of us. That's how we do it. Let's go to Michael, get a recap of what happened in the live training room this morning, I'll be back. We'll talk to John. Today is Dr. Tom Day, so he'll be joining us at the top of the hour. We'll look at the Concierge Trade Alerts. We'll look at Logic 247. All that and answers to your questions. Michael,
answers to your questions. I am here.
There we go. You're locked and loaded, so I'll hit mute and it's all yours.
Okay, I got it. All right. Good afternoon, everyone. Today is Thursday, the 17th day of October, 2019. If you have not taken a free trial with us and you want to take a free trial with us, go to the homepage at CFRN.net. And there are several places where you can apply for the free trial, but 5-day free trial, apply.cfrn.net. If you click on that, you will be brought to this page, eminitrainingschool.com. On this page, all we ask for is your name, your email, and your phone number. You can tell us your biggest trading challenge. Let me just, you know what? Let me do this. Okay, yep. On this page, all we ask for is your name, your email, and your phone number. And you can tell us the biggest trading challenge so we can tailor one-on-one training specifically for you. Hit the send button. Once you hit that send button, you'll be sent a confirmation link. You must click on the confirmation link, okay? If you don't click on the confirmation link, we don't know that you took the free trial. So you got to do that, all right? Now, what does this do? Now, what does that do? There. Okay. That's how you get to take the free trial. Now, results. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today, as I said, is the 17th day of October, 2019. We made 6 ticks in the euro, 6 ticks in crude oil, 5 ticks in gold, and 11 ticks on the ES. That put us at plus 285 on the morning session. Today it took 85 minutes and 10 trades to get to the goal for the day. At that point, we're up $105 a contract. We took a total of 14 trades. So on the month now, we're up $2,012. That's over 13 days, averaging $154 per day. And on the year, we're at $30,443. That's over 188 days, averaging $161 per day. Now, yesterday, it took me 8 minutes and 2 trades to get to the goal for the day, and then I took another 10 trades. So that would have knocked that down quite a bit, that number. Well, this number, $130. Today we got $285, and we took 14 trades. So, that's why I just give you the average. Over here on the side, I give you net numbers with an $8 commission and with a $5 commission. Now, most people's commissions are lower than that. They're lower than $5, most people's. But, I wanted to give you a range that would cover everything. If you have a commission that's more than $8 a contract, then you need to give Bert a call. Okay, 866-928-3310. Just give Bert a call, and he will help you out. All right, because nobody should be paying more than $8. All right, sorry, tangent. Squirrel. Okay, now I probably missed 8 or 10 trades today, and every trade that I missed had the potential for profit or break even. I think there was one that was a break even one, but I missed this right here. That was a profitable trade. Took a break even here, missed that, would have been profitable, missed that, would have been profitable, missed that, would have been profitable. And then I picked up 5 ticks right here. And then we get into the break, and there was a lot of movement here, but no trading opportunities, I think. Let me, yeah, I guess there was. You could have gone long right here during the break to grab that leg up. Could have done it again here, though I probably wouldn't have. And it's looking short right here. Now we have not broken this dynamic support yet. So any entry would have to be above the MA1. Yeah, round trip, Brad. If you're paying more than $8 round trip, then you're paying too much. Okay. And you got Bert's number, right? 866-928-3310. I don't know if he's in today. I haven't texted him yet today, but he wasn't in the room this morning. And he usually is. He's usually in the background, like Valerie. All right. All right. Excuse me. All right, so right here was a momentum long trade that I missed. Then I grabbed this one here and got a break even. I grabbed this one over here and picked up 6 ticks. And I missed that one. During the break, was it right here during the break was a long opportunity. Okay, I'll show you. That's our trend line. Right there, the close above the trend line, because the cycle would change colors. So it would have been right here on that bar. Wow, that is ugly. Crude oil during the break was just nasty. Now, this area I had put in there yesterday. It was a range from yesterday. So let's just go back to a longer time frame and see how nasty it is inside this range. Now, the number for this week I had said was 53.10. And I said that this morning when price was here. And 53.10 happens to be right in the middle of this range. And that's where it was. You know, it's been going back to this range in here. I don't, you know, the 53 level seems to be significant. And I was saying that this morning. All right. Oh, I didn't even go over the trades. Sorry. Hang on. We had crude inventories come out today, and there was a build of over 9 million, and they were expecting a build of 2.7. So the crude inventories were way off. And what we should see with a build like that is we should see prices drop. But it was a little bit built in already. The prices were up yesterday when the API numbers came out, and they dropped today. 53.10 is the number. I don't have any option plays on that right now because price is just too close to it. Okay. But if in the next 2 days, we'll say, you know, because we had a holiday week this week, well, as far as, you know, the markets were concerned, we worked all week. But as far as the markets were concerned, we had a holiday week. And so they pushed the crude inventories off a day and the API numbers off a day. But on the crude this morning, our first trade was right here. We picked up 3 ticks, and then we had a break even. We missed a long trade right here that would have been profitable, and another one there that would have been profitable. And then we had a break even here and a break even there. And then over here, we picked up a couple more ticks to put us at +5, and then one more to put us at +6. And we missed a short here that would have been profitable had we gotten it. Okay, and then during the break, there was a shorting opportunity there and there. Both would have been profitable. There was a long right here that would have stopped out. And that was it. And that was it. It got really choppy here in crude. And I don't know why. Hang on, let me go check something. Let's see how close we are to the next contract. Crude oil. Pittsfield, Massachusetts. Okay, In the X contract, we have 295,000. Yeah, we're getting close to switching to the Z right now. It's probably going to be next week. We'll roll to the Z contract in Crude. Okay. I mean, I'll check it again tomorrow and see what's going on. But let's jump to the ES now. On the ES today, we started out with one tick on the first trade, then a break even, then another break even. And this is the one trade that we missed that I think, you had just a little chance for profit. It pulled back and then it did go down, but depending on where you entered on that trade, because it was a momentum trade, you may have gotten a stop out on it. Okay, but you should have moved your stop to break even as soon as you could. Okay, then here we picked up a couple more ticks. So we're at +3 at that point. Then we grabbed 8 ticks on this move, put us at +11. And then we get into the break. During the break, it was really choppy. And I don't see a single trade set up. It's starting to right now. Right in here. See, but any entry has to be below the MA1 because we have unbroken dynamic resistance right there. So any entry has to be below the MA1. Okay. And this trade right over here on the euro that I highlighted a few minutes ago, it just took off nicely. But the green line you see is up into the cycle right here. That's when it's time for it to pull back and do it all over again. So if you have that trade on right now, I would be locking in profits and trailing my stop right behind price. Okay. Okay. And that was our morning session. So, as I said earlier, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 17th day of October, 2019. We made 6 ticks in the euros, 6 ticks in crude, 5 ticks in gold, and 11 ticks on the ES. Put us at +285 on the morning session. Today took 85 minutes and 10 trades to get to the goal for the day. At that point, we're up $105 a contract, and we took a total of 14 today. But you just saw that we missed probably another 10. Excuse me, on the month now, we're up $2,012. That's over 13 days, averaging $154 a day. On the year, we're at $30,443. That's over 188 days, averaging $161 per day. 161 per day. Okay. If you have not taken a free trial with us, then go to the home page here at CFRN.net. Right over here in the right-hand column, it says 5-day free trial, apply.cfrn.net. If you click on that, you'll be brought to this page, eminitrainingschool.com. Here, all we ask for is your name, your email, and your phone number. You can tell us your biggest trading challenge so we can tailor one-on-one training specifically for you, and then hit the send button. Once you hit the send button, you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click that link, we don't know that you took the free trial. Okay. Okay, and that's it. With that, we can pass it back out to fabulous Phoenix, Arizona. Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
I am ready.
Okay.
And there we go.
There you go. I can see your charts.
Recap of the recap.
Today, it took 85 minutes and 10 trades to get to $105 a contract.
That's per contract.
That is one contract.
That $100 could be $1,000 or $10,000, or when you look at the S&P 500, it could simply be 100. Now, the reason we use one contract in the live training room, as Michael I know has explained many times, it's because the student is always going to attempt to, emulate the teacher. So if the teacher's trading 10 or 20 or more, then the student may attempt to do that themselves, and that's not a good idea. Not a good idea at all. In fact, if you become a CFRN partner or passport holder, one of the things that we provide you with is our 24/20 blueprint. That's designed to take a trader from 1 to 20 contracts over a period of 24 months. Slow and steady wins the race. The temptation to go too large too soon, it's very, very tempting. And it's something, it'll be one of the first places where you get to really exercise your newfound self-discipline and self-control. The blueprint wants you to put together 10 consecutive days in a row in SIM where you reach your daily goal in 10 trades or less. Once that's accomplished, the blueprint will give you the green light to go live with just one contract. Then the goal becomes to increase your account balance by $2,000 with one contract. Once you reach that goal, then it's time to add a second contract. But the beautiful part of it is, when you add that second contract, you're not doing it with your savings, you're not doing it with a loan, you are building your business step by step, contract by contract, with profit you actually earned in the market. And then going forward, when the blueprint tells you it's time to add number 3, number 4, etc., it's always being done with profit you earned in the market. I can think of no better way than to fund and fuel the growth of a trading business than internally. You're building on a strong, solid foundation. It's a testament to the fact that you do understand how markets work, and you do understand the difference between a high probability, low risk trade setup as opposed to just, throwing darts at the wall, hoping one of them will stick. The chance of you getting there before 24 months is slim to none, because if you follow the instructions, and if you live in a perfect world, you'll get there in 24 months. But I don't know anyone who lives in that perfect world. Things happen, vacations, sickness, you name it, life happens. There'll be rough patches. You'll have to go from live back to sim, probably on a couple of occasions, and that's not a walk of shame. It's a smart business decision. The worst thing in the world you can do is, when you hit a rough patch, is to just bleed out on the trading floor. I mean, you've worked days, weeks, maybe even months to build your account to where it is at the time you hit the rough patch. And if you insist upon trading through this, okay, now this is what it looks like on a 30-minute chart. It will look differently, obviously, on different time frames. But if you don't at least recognize that you're locked in this kind of an epic battle, that you're in a trading range, if you don't understand that, the account that you built up over days, weeks, months can evaporate over the course of a session, a couple sessions, because you keep telling yourself that, well, it can't do this again, and then it does. Okay, all right, well, it can't do it again, and then it does. All right, well, at least I'm saved now, because there's no way it could happen again, and then it does. So, when you hit a rough patch, the blueprint is going to put you back in sim if you have 2 days back to back where you do not reach your goal in 10 trades or less. If you follow the guidance of the blueprint, that will help prevent you from decimating the account you worked so hard to build up. It will certainly help you avoid blowing up yet another account. Now, there's no guarantee with the blueprint that you won't blow up your account, because certainly you can if you disregard the guidance and the recommendation of the blueprint. So that doesn't make it easy, because trading's never easy. It never has been, and it never will be. But if you will commit to following the guidance of the blueprint and what Michael teaches you in the morning, and what you see here every day on the radio show, and what you learn in the Telegram channel day in and day out, and the workshops and everything else, it will make it easy, but it can make it simple. Okay? All right. So again, today's Dr. Tom Day, so we expect him to show up top of the hour. I sent John an email reminding him that today is Dr. Tom Day. So
John is out there.
Okay, I was hoping he would hop in a little early. So after we talk to John and after we talk to Dr. Tom, we will recap Concierge Trade Alerts, Logic 247, all that, and answers to your questions. If you have any questions for John, by all means, just put them into the chat box and we'll get to them. John, welcome to the show.
Yeah. Well, I opened up his mic.
Okay, all right. Well, as long as he got an open mic, he knows he can pop in when he's ready.
Yes. Yep.
Here's an interesting tidbit. There are 618,000 millennial millionaires in the U.S., and 44% of them live in just one state. What state do you think that might be? Now, we know all millennials live in a state of confusion. Haha, just kidding.
Yeah.
But what geographical state do you think those 44% live in?
I'm guessing California.
TikTok. Good guess. I guess New York. I guess I wasn't thinking clearly. But yeah, you're right. It is California. There are approximately 618,000 millennial millionaires, those with a net worth of over $1 million in the United States, according to a 2019 report from Coldwell Banker Global Luxury and Wealth Engine, which defines millennials as those born between the years of 1982 and 1996, which is the equivalent of being 23 to 37 years old as of this year. The population of wealthy young people is growing, the report finds, and they're getting richer. By 2030, millennials will hold 5 times as much wealth as they have today. That's only 10 years out, 10 and a half, and are expected to inherit over $68 trillion from their predecessors in the Great Transfer of Wealth. Now, the Great Transfer of Wealth refers to the trillions of dollars that will be passed down to millennials from their baby boomer parents, who are considered the wealthiest generation in history. Almost half, 44% of these millennial millionaires are concentrated in California. That's consistent with the general millionaire population. The Golden State also has the highest percentage of business owners, 23%, and also the highest percentage of real estate investors. New York ranks number 2. It's home to 14% of the millennial millionaire population, and the top zip code for young millionaires is in neither California or New York. Want to take a shot at that one?
I would say it's going to be probably a smaller state.
It's going
like
to.
Massachusetts.
There's certainly one out. Traverse City, Michigan.
Michigan.
Traverse
God, I would
City.
I would never think it'd be in Michigan.
Historically a tourist destination, the Lake Michigan beach town has a robust second home market where luxury homes generally start at $500,000, a far cry from the many Silicon Valley zip codes where luxury home prices generally start at about $2 million. And
I would never have thought Michigan.
Yeah, I know. Yeah, that blew me away. That's consistent with another finding from the report. In terms of locations, millennials tend to prefer markets that are more affordable, often in suburbs or second-tier cities where their dollar will carry them further. Here are other popular states and zip codes for millennial millionaires. I'll drag this up so you can see it. Is that you, John? Okay, great.
Yep.
Welcome to the show. All right, so here's California at number 1, number 2, Florida's number 3. There's 4, 5, 6, 7, 8, 9, and 10. Well, John, welcome to the show. Glad to have you with us.
Thanks. Glad to be here. The metals are doing very well today. The Brexit deal was announced. It's pretty well locked in stone right now.
What are the terms of that deal? Can you share that with us?
Pretty straightforward. Britain has the right to make any trade deals it wants. It's basically maintaining its trading relationship with Europe. It's kind of getting the best of all worlds. It's relieving itself of all European government influence. So sovereignty goes back to the UK. Northern Ireland remains in the sort of EU customs union for supposedly forever, and therefore there's no border. You're in Europe when you're in Ireland, or the whole of Ireland, and that's probably going to work pretty well. Now it's got to be passed by Parliament. They don't have it. I wouldn't say it's a done deal yet, but it's probably going to get through because it's certainly better than going out without a deal, by the looks of it.
There's a daily chart on the pound.
Yeah, a little bit of look. It got to 130. Bit of profit taken here.
I think you mentioned I forget what price you mentioned yesterday, but yeah, that looks good.
Yeah, the market, the euro is stronger today. The euro and the Swiss, like we said, is actually stronger, and the pound. The dollar is down to it's down a lot. It's down to 97.30 right now. So it's really kind of breaking down.
What is now, John?
The dollar.
Okay,
US dollar.
let me bring that up. Yeah, bring that up. Oh wow!
I mean, pretty serious, right?
Yeah.
Could be the beginning of the end for the dollar here. This is a pretty big deal that's going on, and even if it has a little bit of a rally, it's probably quite a big week for it. Is that a monthly or a weekly?
That is a monthly, yeah.
Yeah. Look, I mean, can you have a look at the week? See how that is.
There's weekly.
Yeah, it's certainly significant to say the least, and it's right there, right on the lows right now. So the metals are.
Do you think we see 95 in this move, John?
You could do. You really could do. It might go down more than you think. There might be a lot of stuff kind of gearing up here that we don't even know about yet. It could be the Fed's, if the Fed does another rate cut, that could seal the deal. So those, and look at those last 3 spikes. Now, I would say it hasn't reached the point of no return yet by any means. We've seen this happen before a few times, and the market's rebounded. And we still got to get through to October the 31st and the actual exit. So, if we're down today on a kind of a deal, the odds are fairly high we're going to be down towards the end of the month, since the fundamental news is negative for the dollar right now, and the pound could be up a lot higher. It's kind of, the pound's been sort of really down in the dumps for the last 3 years, apart from a few rallies, sort of in the dread of a Brexit, right? Well, now the Brexit, it's sort of like buy the rumor or sell the rumor, buy the news. Mm-hmm. Now that it's getting closer, and maybe people are saying it's not that bad after all. And I think just psychologically, the higher the pound is, the more support the Brits are going to give it. It's not so bad after all. And it's sort of like when you say the best of both worlds. I mean, is London still going to be the top place in Europe? Most probably in the world, maybe. It's certainly going to be London and New York for the foreseeable future. I think, as Tom said a while back, Dr. Tom. I think he said London's been the financial center for 500 to 1,000 years or so. New York is a relatively newcomer, but between the, probably got Hong Kong, New York, London, Dubai, these are sort of like the emerging players in the global financial scene. So it's probably going to stay that way. And Dublin has become much more of a kind of financial center too. So it looks like you got to give Boris Johnson some credit for pulling this off, because
what's his pedigree? What's his, just briefly, his background? Is he a lifetime politician or businessman? Or?
No, he's sort of more of a Paul, I think. And he was actually born in New York, and then he became the mayor of London, and he did a pretty good job for London, and he's made it to the top. And I think he's certainly done a lot in a short period of time, and he's made a difference. And he's fairly ebullient kind of a guy. He's a lot like Trump in a lot of ways, and he wants to get things done. He doesn't like to wait around. So I think that Britain could do very, very well under Johnson. He's probably going to put some tax cuts in and boost the economy, things like that. So I think he's going.
The man in the street, are they
Well,
happy?
if he called an election right now, supposedly he'd certainly sweep them. They'd potentially win, because he's threatened to throw an election several times, and it hasn't kind of resonated. I think the Labourers are trying to stop that from happening, because their popularity's never been lower, apparently. So, and with Nigel Farage, who's a big deal on the Brexit front, and he's potentially got a bigger following today than the Conservatives or the Labour. So if push came to shove and they joined forces, the Farage Johnson combination would be pretty hard to beat. Just looking at that chart, Dwayne,
the Euro, John, or the one before it? Okay.
Yeah, no, the Euro. It kind of look when you see the prints go up by increasing ranges like that, it just go back to the way it was before.
Weekly? Okay.
Yeah, that's pretty dynamic. That usually means there's going to be a kind of a spike higher. So I would say there's a shot of getting up to about 115 on this Euro from here, possibly quite violently. And breaking that whole downtrend line would be a big deal as well.
So long term, is this Brexit deal good for the Euro, bad for the Euro, or
I think it's kind of good for the Euro, because it's not everybody's a winner. It's kind of a win-win deal, this thing, so I think that's a good thing. And the markets, right now it looks like, this pullback we just had when you were looking at the S&P a minute ago, looks like a sort of buy the rumor, sell the news thing. But as you can see, the market's sort of trying to pick up again. By the way, Roku, which I pointed out was potentially a great buy near 100, is just unstoppable now. It's up to just hit 138 a short while ago. Well, it's 137 and a bit. It's really powering on dramatically. IBM is down sharply today, which actually probably caused a bit of this market pullback. The semiconductors are down as well today. So there is a little, there's a little bit more risk in the market because of that. But all the other stuff going on, including the political stuff, doesn't seem to be having any effect on the market yet. We're over we're just around 3,000 right now. That's a pretty good place to be. In fact, we're not that far from all-time highs. If you can just pull up the weekly there, Dwayne, or the daily.
Here's a daily, John. And this is the continuous contract, so I can bring in.
Yeah, actually, that kind of pullback today, it's something to pay attention to. But obviously, going back up to the highs here and taking that out, maybe by tomorrow or next week, will certainly potentially test the 330 area, maybe 340, and we're virtually there if that happens. And remember, if Trump comes out with a trade deal with the UK on November the 1st, I would imagine that would be pretty bullish. And then, you know, it looks like I'm not sure when the Chilean meeting is, late November, I think. That also could be, you know, a big deal too. So, and if you never know, if he's got a deal going on with Europe as well, there'd be a lot of positive news still ahead, and just the way the market just sort of keeps going, it's just pushing its way higher, has been pretty impressive. It's a little bit lethargic today, but I wouldn't read too much into that just yet. Palladium got up to a new high this morning to 1741. And the gold stock's acting great. You know, the Nuggets pushed ahead pretty strongly since yesterday. Newmont as well. You know, we might get a bit of a pullback here. You know, we're up around 1,500 on the gold. It could pull back a bit, but we're either going to go back through 1,500 with authority and possibly push pretty strongly up to 1,525. And the silver's up substantially today. It's up 21 cents already. That's a pretty good deal. So I think that you know, all in all, we're looking quite good on all fronts here.
What other markets do you want to take a look at?
You know, just looking at the way the S&P is set up right now, with this little pullback, if we start pushing back towards the highs, you know, being as a Thursday afternoon, and start pushing above the weekly highs for this week, it really does look like we could push right up through to new highs, either over the weekend or next week.
All right, let me bring up. We had crude inventories today, correct?
I don't know about that.
Michael, was crude inventories, because of the holiday, they pushed them out to today, right?
Oh, because of Columbus Day, right, yeah.
So let me bring up crude here. We'll have a look at that. I heard Michael mention when he was on earlier that next week will be the week for rolling crude forward to the next contract. That sound right to you?
Say again?
Next week, rollover for crude?
Yeah, I think so, yeah.
Let me see what kind of news we got
I
coming
think
out
from now
tomorrow
on, the crude may become weather prone, you know. It tends to be a little bit soft at this time of the year, crude.
All right, on the news front, let's see if we got anything tonight coming out of China. Scroll down. All right, tonight, we got high impact GDP out of China, 2200 hours. So 9 p.m. Eastern, guys, if you're trading Globex tonight, that could move the market. The previous number was 6.2%. The forecast is 6.1%. Also, at the same time, out of China, we get industrial production. Last time out was 4.4. The forecast is 5.0. And there's a number of other, in fact, there's 1, 2, 3, 4, 5, 6, 7, 8, 9. There's 10 economic reports coming out of China tonight. at 9 p.m. Eastern, 2 of which are designated on this calendar as being high impact events. So we don't trade the news, but we like to be aware of the news because if possible, our preference is to be flat ahead of the news. Because let's face it, number one, you don't know what the news is going to be. And then number two, you don't know how people are going to react to the news. I've seen the market rally on bad news, and I've seen it fall on good news. So that's why we have just made a conscious decision to stay away from it, if at all possible. Now, tomorrow, so as far as news goes tomorrow, wow, we got nothing here in the U.S. It's been a very light news week. Tomorrow at 1:45 Eastern, Bank of England Governor Carney will speak. That is the only high-impact news event all day tomorrow.
You know, the way the Chinese markets are setting up, Dwayne, looks very bullish. If you want to put up
What's a symbol?
yin or FXI.
FX. This one?
See, I mean, yeah, look at that. It kind of looks like it's ready to break out. If it gaps higher tomorrow, this thing could really move. And if you look at EDC, it's kind of the same, you know. And Baidu, not Baidu, Baba looks very good too.
We've already had Singles Day this year, right? That's behind
No,
us.
that's coming.
Oh, it's
November.
coming? Oh, it's in November. Yeah. Okay, so in November we have Singles Day, which is a big deal. And then next month, of course, we have Black Friday, followed by, what do they call it, Black Monday? When everybody does the online shopping, is that right? Mm-hmm. Okay.
So, BIDU, maybe just take a look at that.
And this is the Chinese equivalent of Google. Best way to explain it, right?
Yeah, it's not, you know, it's a little bit like Roku was a few weeks ago before it started turning up. So, you know, it was kind of a little bit hard to buy Roku at the bottom because it was just sort of going nowhere, and then it took off to the upside and hasn't looked back since, except just starting to come off a little bit now. You know, we've had a great turnaround in the metals so far, in the metal stocks. Whether, you know, I wouldn't rule out some sort of a pullback, but I think if we get any kind of a pullback on the metals and then it sort of continues higher, I think the situation is going to be a lot safer on the upside for the metals. So, and they really have acted pretty well so far. You know, if you look at Newmont, maybe take another look at Newmont.
I just want to look at Palladium real quick.
Yeah, look at that. It's just fantastic.
This thing's off to the races.
Yeah.
Do you have any kind of upside target you're looking at?
Well, if you remember, I said 2,000. You know, my 2,000, 2,400, possibly even beyond that before this thing is over. I think it could go all the way. You know. Mm-hmm. So, and if you look at NEM, right?
Here's Newmont.
See, you know, that great reversal there. I mean, all of the metal stocks are starting to look like they're. And if you check out RGLD, you know, these are pretty strong. That's a pretty strong. Look at the last time we had a kind of a spike like that. You know, we went from 112 right up to almost 140. This one could take us up to new highs. And it is starting to look like the three-wave pullback is over. And you know what? If the news out of China is better than expected, that could be.
Now, while this Royal Gold, I mean, based on today's candle, is starting to look, you know, a bit bullish. Remember, folks, that at one point during the course of, oh no, this is a weekly chart. Okay,
right,
all right. So based on the weekly, I mean, this was a big red candle at one point, looking pretty bearish. What do you attribute the turnaround to?
To just what we've been saying. I think the gold market got down too much, and you know, we've seen You know, we
Is
thought
the
this
Brexit is the Brexit playing into this?
We thought it might come down to 110, but it
Mm-hmm.
didn't even get there. You know, about 114 and a half. So that's pretty impressive. And this is a very powerful issue. You know, if the market, if gold starts going above 1550, 1600, and this thing is going to go dramatically higher because it's all net profit. You know, every dollar above a certain cost of production is basically net profit. So, you know, if we do run up to 1700 or so, you know, it's going to it's going to be a very big deal. And if we get to 1900, it's going to be huge. You know, you basically adding, you know, hundreds of dollars per ton, and, you know, almost in net profit to the ore coming out of the ground.
Is what fixed number are they using today? Cost of production, and I realize that's going to vary from mine to mine. And,
you know, the big ones, the big guys, sort of varying from 800 through 1200, I would say. There's some a little bit higher than that.
mm-hmm.
There's one or two that are a bit lower. I think the best out there is about 500. There might be one that's less than 500, sort of 350, 400, something like that.
Silver on a daily.
Silver looks really good there.
I mean, it's holding its ground. It hasn't gone anywhere, but it's not falling apart. So
yeah,
if it's basing here for the next run up, that could be. We could see $20 on this next run up.
Yeah. Well, look, I think if we get any, you know, if we start taking out 19, you could see an acceleration to the upside. I think we get into the 20s, you're going to see some very big moves. You know, it could go to 20, 21, 22, 23, even 24 very, very quickly. It could be quite explosive. And I think we're you know, if we break into the 20s, probably going to go to 24, 25 with relative ease, you know. And if we get above, you know, if we start getting above 25, it really puts 30 in the sights. So that would be very, very positive for the metals in general. It'd probably, you know, I think if we get $30 on silver, we're probably pushing all-time highs on gold at that point.
You know who Damon Johns is?
Yeah.
Somebody gave me tickets to go see him this Saturday morning at 9 a.m. And these tickets have a face value of $147. I think that's part of the marketing. It's special invitation, private event. Damon John's success team coming to Phoenix one day only from the hit TV show Shark Tank. Now he made his money initially off of the FUBU clothing line. Did I get that name right? FUBU? Okay. So I don't even know what this thing's about, but it was a free ticket, so I said, yeah, sure, I'll go.
I think it's probably worth a trip. He's a good guy. You know, he's you know, look, he's a highly successful. You know, from the start, he
handmade these hats and stood on the street corner and sold them. I mean, yeah, it's a true, you know, rags to riches kind of a story.
Yeah, he's done very well, and he's done pretty well with a lot of these Shark Tank deals too. You know. Yeah,
he has. It doesn't really say what the point of. I'm sure the point of it is to sell you some kind of a course or something along those lines, and that's okay. I know how to, you know, just leave when the talking's over. I don't have to go to the table and back. At this event, you'll quickly see how to move any idea from concept to profit, take advantage of key business growth areas in 2019, benefit from new trends shaking our economy, profit from the changing real estate market, and harness emerging trends in social media and online sales. Well, that part will be of interest to me. Plus, you'll learn key insights on becoming a success in today's marketplace. This will be a truly life-changing event. So, guys, you may not recognize me on Monday on the show here because it's a life-changing event. So I'm looking forward to it, you know. Reason to get out of bed on a Saturday morning.
Look, you never know what you might pick up at one of these things.
Absolutely.
You can never know enough.
or who you might meet, or who you might bump into, or you just, you got to play to win.
Exactly. So,
Okay, did Dr. Tom make it in here yet? Let me look and see. I know he's supposed to be on here today. Let me check in the box and see if I see him. I don't see him. Well, that's unusual. Oh, you know what? I doggone it. He emailed me last week. I wish he'd emailed me the day of the show so I would actually remember. He's not going to be on today, John. So I apologize for rushing in early, but I just want to give you plenty of time to cover stuff. But he emailed me last week right after the show and said, I'm very sorry I won't be able to make it next Thursday. So, my bad. All right. Anything else you want to take a look at, cover?
No, I think we got it covered today. So,
all right,
thanks
John.
very much. All right. All the best. Bye-bye.
Take good care. Talk to you soon.
You too.
Okay, guys. Well, you heard it. There was going to be a Dr. Tom, and now there won't be, and I knew it all along. But someday, you'll get old and you'll forget stuff. So we'll go to the alerts and recap all of those. Don had, in the chat box when I was talking about the China news, he posed the question, can you really trust numbers out of China? Got to think they fudge the numbers. And I said, yeah, I agree, they probably do, which is that much more reason to kind of keep an eye on it tonight when the numbers come out. Because if you're going to fudge the numbers, I mean, if the number is really 5 and you're going to fudge it to a 6, hey, what's to stop you from fudging it to a 9, or 10? So whether it's based on fact or reality, that doesn't even matter. I'm sorry to say. It's the market's perception of it. Now, here again, if they fudge it too much, then maybe the market just doesn't believe it. I could send the market in the opposite direction. So if you're not already in a trade at the time any news event comes out, our long-standing recommendation, stay flat, let the report come out, good or bad, watch how the market reacts, let it run, up or down, wait for the pullback, and then trade the continuation of the move in the direction of whichever way it initially spiked. That's how we deal with news. Now, if you're in a big position and it just doesn't fit to exit the position, even though this news event's coming, then you want to at least be aware, because if it starts to change the shape of the market too greatly, then you got to come out of it, whether it's painful or not, because it will only get more painful. So, and everybody has a pain threshold. You may or may not know where yours is, and it may actually be a moving target. It may shift. It may change shapes from day to day. One day, if you have 3-4 good days, well, now today your pain threshold might be higher than if you had just had 2 or 3 difficult days. You should take that, go sit in the park with it, think about it. Your pain threshold today should not be based on whether you just had 3 good days or 3 rough days. It should be based on what's appropriate for you, your knowledge, your skill level, your account size, and your trading plan. All right. Now, you've heard me say of late, the pendulum swings both ways. On Logic 247, we've had some pretty incredible weeks. Going back a month or so, we had a week where 0% were stopped out. We had a week of 10%. And we had a week of 14%. There might even have been a week in there of 16%. And I keep saying, now the average that we've held over the past year, or 63 weeks it is now, is 20%. So when we see numbers like 0 and 10 and 14, well, this is why they call it an average. And the pendulum swings both ways, and that pendulum will eventually sort it out to help you find your average. So good days or bad, we always keep you abreast of what's really going on. Now, I know a lot of times you get emails from different organizations, whenever they have a particularly great week or great day or great trade, it's time to blow the trumpet, toot the horn. We try to stay away from that. We try to just report it each and every day as it happens. Whatever the truth is, I mean, it's just so much simpler to deal in the truth than in the facts. And we pride ourselves, and this is sort of the good pride, I think, because you have to work towards this. We work very hard to be very transparent. So this week so far in Logic 247, we've had a total of 30 alerts issued, 2 never triggered. I think we're still waiting on results from 8 or 1. We've had 19 actionable alerts. 6 of them have been stopped out. That's 32%. 32% of actionable alerts stopped out. So see, this is not the kind of thing that we want to sweep under the carpet. Well, let's talk about something different today, because that's not very pretty. It doesn't matter if it's pretty or not. It's the truth. It's what's happening. And that's the one thing, or one of many things, that we promise you, and that's to always tell you the truth about markets and about what we're doing, So there it is. Not happy about it, but I'm also not curled up under my desk in a fetal position over it, because I know the pendulum swings both ways. See, that week of 0%, years ago, I would have been not only dancing on my desktop, I'd have been square dancing, line dancing, I'd have been doing the waltz and the foxtrot and the rumba, or whatever that's called. But I don't anymore, because pulling up this little Telegram channel with that week of 0 and that week of 10% and that week of 40, it was almost painful. See, that's how my thinking has changed over the years. Who can't be happy about 0% getting stopped out? That's great. But I knew there was a price to pay for that. And even the 10 and the 14, because I know our average is 20%. So I knew the day was coming that I'd have to show you this. Now, this, it could get worse, it could get better. We could finish the week out tomorrow with 20% on the nose, or less, or more. I don't know. I just know that our average is 20%. That's what I have to stay focused on. It's like when you're driving. You don't look at the road. I'm trying to teach my son this right now because he's learning to drive. You don't look at the hood of the car, or you don't look 10 feet in front of the car when you're driving. You got to look up ahead. Look at where you're going, and there's a high probability you'll get there in something that actually resembles a straight line. He's absolutely mystified because he's such a whiz kid at these video games, whether he's driving a car or a motorcycle or some kind of spaceship, he's very nimble, very quick. His hand-to-eye coordination is incredible. Put him behind the wheel of a car, and he's still at that stage where he kind of falls apart a little bit. It's just going to take experience, time behind the wheel, that sort of thing. At this stage, he's still, driving in the neighborhood kind of driving. But, he'll correct and overcorrect and then overcorrect. And you probably recognize some of that in your trading. If you're just getting started, if you're just getting going, you see something happen, and so maybe you're long and then the market's not meeting your expectations, so you exit and reverse. Oh, now that doesn't look so good, so you exit and reverse again, and then you exit and reverse again. And ultimately, whatever happens, which usually is probably getting stopped out because you reach the pain threshold. And even if you do have a positive result, ultimately, after all those trades, well, depending on how many contracts you're trading, the commissions can add up, right? Okay, so enough about that. Let's take a look at the Concierge Trade Alerts from last night. Now, what I just showed you, Logic, that's our 24/7, round-the-clock, dynamic alert service. You might get an alert at 2 a.m., you might get one at 2 p.m. in the Telegram channel. You will get an alert as opportunity develops. I have no control over when the opportunity develops. My only responsibility is to report to you that an opportunity has developed, in what market and what the opportunity represents, where the high probability, low risk entry is, where the reasonable interim target is, and where the ultimate trade to target is. That's my responsibility. Then it's back to the market, because the market is what provides the movement. The market is what makes points available. We're just holding the flashlight, pointing the way. Okay? All right, Concierge coming up. Okay. All right. If you want to grab a screenshot, you're welcome to. Got them out last night, 8:50 p.m. Eastern. So that's 2050. So I need to go to the 2030 candle on my chart. So 2030 last night, that candle right there. It was during the life of this 30-minute candle that the alerts came out, and on Crude, the alert said, consider being long, 53.30. That's going to be way up here. $53.30. Price ran right up to the number and reversed. That happens. That's the truth about trading. Okay. 53.30 sent it back down to these. All the zones on all the charts today are this week's weekly trading zones. Remember, partners or passport holders and partners get their zones Monday morning, 6:15 a.m. Eastern, before Wall Street wakes up. And that gives plenty of time to get them on the chart and to be ready for the Wall Street open. So price goes up to the trigger. Order flow dictates that we can't trade any higher than 53.30. So if we can't go higher, if price can't get to the zone overhead, well, then it's forced to return to the zone below. Price is always trying to get to a weekly trading zone. Now, I was in a mentoring session yesterday. It dawned on me that I might try to explain what I mean by that in a way that doesn't sound so self-promotional. When I say that price is always trying to get to a weekly trading zone, what I really mean is price is always on a mission. Okay, from the moment the market's open, Sunday night at 6 p.m. Eastern till Friday afternoon at 5 p.m. Eastern, price is on a mission. It's trying to get somewhere based on order flow. Order flow is what dictates. If there are more buyers than sellers in the order flow, price is going up. If there's more sellers than buyers, price is going down. There are times when the market, as we've seen over these last couple of days, and because of the dynamic that we talked about, nearing an all-time historic high, the market's not quite sure which way it's going to go, because traders, whether you're retail or institutional, traders are what create the order flow. They're the ones who submit the buy and sell orders. And again, if it's weighted on the side of the buyers, price is going up. If it's weighted on the side of the sellers, price is going down. And there are times when we reach sort of an equilibrium. We have basically the same amount of buyers and sellers in the marketplace at the same time. Trades are still taking place. You can watch your volume indicator, and it's churning. I mean, the market's doing business, but it's not going anywhere. When the balance of power shifts in favor of buyers or sellers, then the market will once again begin its directional move. In this case, we can clearly see prices trying to get to the weekly trading zone overhead. It was trying to do that last night. It got stopped dead in its tracks at the important price, important area. Now I want you to look left, okay? We had a Concierge Trade Alert back on the 14th to sell 53.25. Okay, did that work out? Yeah, it's 3 different times. What happened when we got to that same area last night or this morning? Now, I want you to really think about this for a minute. Well, okay, Mr. Dwayne, then why'd you put it there? That's a great question. Because I wanted to remind you it's an important price, an important area. Okay? When you go and draw your lines in the sand, and that's exactly what you should be doing, when the Concierge Trade Alerts come out, you've got a long side of the equation and a short side. Go draw 2 lines on your chart corresponding to the information that I send you, and know that everything in between is the market still trying to make up its mind. The market is still waiting for the balance of power between buyers and sellers in the order flow to shift meaningfully enough in one direction or the other to actually provide movement. Now the flip side of this crude alert was 52.65. And that's right there. Okay. Now, again, this is another reason that you don't blindly trade any alert, concierge or logic. It's very important. It's part of the learning process. Remember, what we offer is not just an alert service, okay? What we offer is to teach you how to understand how markets work and hopefully help you learn to become a trader, okay? There are many alert services out there where that's all they do is they give you a number and you trade it, okay? And that's fine. If that's, and a lot of people, that's exactly what they're looking for. They don't want anything else. Their life's too busy, whatever. That's not what we offer. Okay, so let's just be clear. We're always going to be trying to teach you how markets work, which will lead you to learning how to trade. So, price marches up to the important price, important area, and we see what happened. Right back down to the weekly trading zone. It started the journey at the zone, up to the important price, important area, back down to the zone. This time we didn't quite get to the trigger, and it sent us, now this was the 9:30 opening candle this morning on Wall Street, right there, 9:30 to 10 a.m. We come back, we spike that weekly trading zone. Now that weekly trading zone has been good support here and 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 here. Remember, the zones go out to partners and passport holders Monday morning, 6:15 a.m. Eastern, long before any of this ever happened. So price has been locked in an epic struggle on crude since, let's go back and look at the Sunday night. Globex open. Sunday night was the 13th. So Sunday night, $1,800 right there. That red candle. That's the Globex open. Okay, so we came down to the zone, we consolidated at 54.45/50. This is price making up its mind. Does order flow support a move to the zone overhead or the zone below? Well, the proof's in the chart. Order flow supported a move to the zone below. I don't know if it hit it to the tick. No. The swing low was 53.96. So I actually missed it by 1 tick. Good support. Sends it back up to, not the zone, but it got up to an important price, important area. And if you look at left, see how right here this was support coming down? It became resistance on the way back up, turned the market, and sent it right back down through that zone. Okay, that's a slice. What typically happens on a slice, we do not see that happening here. Only 3 things happen when price gets to a weekly trading zone. The most likely, the one you see over and over, is consolidation. The second is rejection. That's when you're left with just a wick touching the zone and price runs in the other direction. The third is the slice. Typically what happens on a slice, when we slice through a zone like this, price will pull back up to the zone or down to the zone, depending upon the direction that was sliced through. And since this failed to be good support, market will typically pull back up and confirm it now as good resistance and then continue a move in the direction of the slice. Okay. All right, so we open here, and what's the zone above that? The zone above that's way up at 55.55. Okay, so consolidation, drop, rejection, slice, and then we get into this big zone here, and the distance here from zone to zone is 52.80 to 53.90. That's $1.10. A $1 move in crude is the equivalent of $1,000 per contract traded. Okay. Okay. So this 52.25 or 53.25 we're talking about earlier, which was key over here. This took us down to our target, $450 per contract traded. Support at the zone, consolidation, so this back up. So on this one, we triggered once, we triggered twice, we triggered 3 times. We found good support here. Now we attempt to move higher, can't do it, come back to the zone, again support, consolidation, another attempt. You'll notice there's a high, a higher high, an even higher high. We come back to the zone one more time, good support. We launch another run at the zone overhead. Remember, price is always trying to go somewhere. We are able to identify with our zones the highest probability place that price is currently trying to get to. Okay. I don't want to sound too self-promotional when I say price is always trying to get to a zone as if we control or own the markets. We don't. We're powerless against the market. But by studying the market's behavior and understanding how markets work, we do know what the next high probability move is. It doesn't always come to pass, but it comes to pass more often than it doesn't, which is how you're able to call it the next high probability thing. Oh, I see your comment there, Don. Thank you very much. I appreciate that. That's very kind of you. Okay, so consolidation. We're heading for that zone, but there's an obstacle in our path. If we look left, right here, we didn't even get to the number to the tick because sellers came in early, pushed it down, right back to the zone. And this is when alerts came out last night. Okay. Price runs up to the trigger, can't get through it, comes back to support. We make another run, we spike it, we get up to 53.47. That's $170 per contract traded. Price comes back to the zone again. And here's buyers coming in a tad early, right? We didn't quite touch the zone. And this move, price is trying to get to that zone overhead. It has three obvious obstacles in its path. This swing high, this swing high, and this swing high. So, as they say, it has its work cut out for it. It's got to overcome the sellers that are parked here, the sellers that are parked here, and the sellers parked here. Okay. All right. Let's go to the S&P. Okay. Last night, Concierge Trade Alert for the S&P, consider being long, 3001. Okay. $3,001. Swing high, 3,675. So that's 5 3/4 points. That's what the market made available. Important prices, important areas are almost always tested. So we get back below the trigger, make another run, put in a slightly higher high. This time we put in a high at 3,008. So the market made 7 points available on that attempt. It came back to the zone, found good support. When price approaches the zone from above, we always expect it to be good support. And when we approach it from below, we expect it to be good resistance, and until it isn't. Okay, so we're approaching that important area again right here. So a Thursday radio freebie, maybe 3001 up to 3005. It's a 4-point move. Now, at 3005, that's an initial target, okay, just shy of the swing high. The trade to target will always be that zone overhead on a long 3018. So you know entry, you know initial target. Then you have to recognize any obstacles that are in the path, and then that ultimately takes you to the doorstep of the zone overhead or below, whichever direction the move is in. Okay. All right. And on the short side last night for the S&P, we were watching for 2976, and that just never came into play. For the Dow, consider being long, 27025. Okay, 27025. And we put in a swing high at 88. Alexa, 88 minus 25, please.
88 minus 25 is 63.
Alexa, 63 times 5, please.
63 times 5 is 315.
Okay, so the market made $315 per contract traded
I'm not
available.
quite sure how to help you with that.
Thank you. And important prices, important areas, almost always tested. So we get back below the trigger. This time we put in a slightly lower high. On the S&P it was a slightly higher high. This one's slightly lower. So 70. Alexa, 72 minus 25.
72 minus 25 is 47.
Alexa, 47 times 5.
47 times 5 is 235.
Thank you. $235 per contract traded. That's what the market made available. We've come back to the zone, which we expect to be good support till it isn't. Okay. The trade to target from here, 27,205/210. Recognizing that we have obstacle here, and if we look left, we can see that this obstacle falls right smack dab in the middle of this obstacle and this obstacle. So we can call that an area. So there's a pretty difficult area the price has to get through. But once it gets through there, then we have clear skies for the most part up until 27,205. Next for the Russell. On the Russell, consider being along 1537. And the swing high, 1543. So that's 6 points, $50 per point, $300 per contract available. Important prices, important areas, almost always tested. So after we run up 6 points, price gets back below the trigger. Off we go again. And so far the swing high is 1541.80. The previous swing high was 43. Okie doke. Gold. On gold, considering long 1498. It's going to be right here. There's 1498. So our price marched right up to it. Looks like to the tick. 1498.1. One tick over the line. Couldn't get through on the first pass. So we had a leg and a retracement. Leg and a retracement. We'll pull back into that support area. Muster our buying strength. The market does. Launches another run. And this time makes it up to 1501.1. 1501.1. So from 98 to 1501, that's 3 points. Gold pays $100 per point. So that's $300 per contract traded. That's what the market's made available. And then important prices, important areas. So we get back below the trigger. And it's in the process of making another run. The swing high so far on this move, 1499.4. So that's $140 per contract traded. That's what the market has made available so far. And of course the trade to target overhead, 1506/1507. In queue. Concierge said to consider being along 79.62, which is right here. Yeah, come on. 79.62. And we can see the swing high. This is the zone overhead. That's the trade to target. Alexa, 94 minus 62.
94 minus 62 is 32.
Alexa, 32 times 20.
32 times 20 is 640.
Thank you. So the market made $640 per contract traded. Now, you may have noticed I just said something a little different. On all the others, I had to say the market made X number of dollars available. Why the difference? Let me show you. Okay. From this trigger, F1498, the target is 1506. If price had gone all the way to 1506, I would have said the move in goal paid, what would that have been? 1498, $800 per contract traded, because you have a defined entry and a defined target. We've not reached that target. So I have to say, in the vein of being, transparent with you, this is what the market's made available. Now, you may or may not have taken profit here or here or here. And I'll be the first to tell you that getting out of the swing high or swing low is pretty difficult. In fact, the only way I know to do it is by accident, because we don't know that any move is going to be a swing high or swing low until after the fact. Which on a historic chart, well, let me just say that anyone can look like a genius on a historic chart. So just be careful when you're looking at, somebody walk you through a historic chart. The real test comes when you start talking about the hard right edge of the chart. Okay. So that's what the market has made available so far. Now with the NQ, what I can say is because we had a defined entry and a defined target, and price made it to the target. What was the swing high? 94.75, went 3 ticks beyond the target. So now the words are the NQ paid $640 per contract traded. If you used our entry and used our hard target, that's what you got paid, less any slippage that you might have had from your particular broker, or maybe you were, a few ticks late on your entry, or maybe you got out a few ticks early. You get the drift. Okay. So we covered the S&P, covered the Dow, covered the Russell, covered the NQ, gold, crude. I think we've done it all. Okay. Back to the daily chart for just a moment. Okay. Now, just get it in your head that the next few days and weeks may be somewhat grueling. Okay. Nobody likes a nice extended move any more than I do, I don't think. But long extended moves just might not be in the cards because of the epic battle, epic struggle that I talked about earlier in the show. This battle between bulls and bears as they fight and fight against the new all-time historic high. On this historic high, you can see that we struggled a bit there. Here it wasn't so bad. Here's one. See, this went on for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 trading sessions. This one went on for 1, 2, 3, 4, 5, 6, 7, 8, 9 trading sessions. Cycle guys might be able to take something out of that right there. This one really was 1, 2, 3, 4, 5. Okay. All right. Sounds like time for our good word for the day. Oh, reminder, Diamond and Silk will be with us Monday right here on CFRN. If you do not know who the ladies are, they're a lot of fun. They're very passionate about the things that they believe. They were discovered by Jesse Waters. You know Jesse, I'm Waters, and this is my world. They're smart. Their personality is infectious. Little larger than life. They're personal favorites of the president as well. And my wife and I met them at a Fox Nation meetup in Scottsdale back in May. I had a chance to sit on the couch, talk with them a bit. And I invited them to come to the show, and they were kind enough to say sure. And what's really embarrassing is the other day I was just looking for something in my email, and I found an email from their handler back in May that said the ladies are able to come on tomorrow at 1 o'clock. And then there was a couple more harried emails like, hey, what's the dial-in number? Hey, what's going on? Wow. Right? I don't know. It fell through into my, I don't know how it got into my spam or wherever it was. I didn't see it. That's, and I'm owning that. It's my fault. They sent it, and I didn't see it. So I felt bad, and I emailed, and I apologized. I'm like, wow, I just saw your email like how many months later? And he said, hey, don't worry about it. Things happen, which was very nice and understanding of their handler, Tammy. Very nice lady. And so, God willing and the creek don't rise, they'll be here Monday, 1:35 p.m. Eastern. Now, they have pretty busy schedules. I don't suspect they'll be here for an hour. You know how it is with some of our guests. I always invite a guest when I'm inviting authors or public figures. I just tell them, give us 15 minutes if you can. Quite often, those conversations turn into a half hour, an hour. There have been cases where it ran longer than that, and that's okay. But with these ladies and their schedule, I think probably 15 minutes would be what we get. But hey, they're welcome to stay and visit for as long as they have time. Okay. Yesterday, we talked about worshiping and God's Word. Today, we're going to talk about trying to learn something every day. Unfortunately, my kids don't learn something every day because they already know everything. We threw out our encyclopedias. It was just redundant. I'm kidding. I was just like that when I was a kid. Proverbs 2:10. Knowledge will fill you with joy. One Friday morning, an eager young Stanford University student stood before Louis Janin, a well-known mining engineer. He was seeking employment. Janin informed him, well, the only thing I need right now is a stenographer. The young man eagerly said, I'll take the job. But then he added, I can't come back until Tuesday. Janin agreed, and the next Tuesday, the young man reported for work as scheduled. Janin asked, by the way, why is it that you couldn't come back before Tuesday? The young man replied, because I had to rent a typewriter and learn how to use it. Let that sink in. Whether this is a true story or not, it supposedly is, but when you approach well, you've heard it said that an obstacle is an opportunity in disguise, or some clever thing like that. But if you were presented with the exact same situation, just think about how would you respond, and just be honest with yourself. You don't have to tell me. You were offered a job doing something you didn't know how to do. Would you simply own up and go, sorry, I don't know how to do that? Or would you do what this young man did? Think about it. This isn't a judgment call. There's no right or wrong answer. I just want you to get in touch with who you are, how you think, how you react. And if the answer is not the answer that you wish it was, that's the good news. You can change it. You can become the young man with the typewriter if you want to be. Okay? The young typist, by the way, was a man named Herbert Hoover. I guess it is a true story. Whose can-do attitude eventually led him through the doors of the White House to become one of America's presidents. By taking shortcuts, you risk shortchanging your future. Your unwillingness to learn today will leave you unprepared for tomorrow's opportunities. No skill you learn will ever be lost. Gleaning knowledge and learning new skills builds confidence and sharpens your mind. Successful people have one thing in common: they never quit learning. Furthermore, God calls prepared people, so we better be prepared. We need to prepare ourselves. If you take a look at some of the, popular movers and shakers in the world today, some of the movers and shakers, the fellow from Virgin Airlines, and just so many others. If you hear an interview with them, you'll hear them talk about what voracious readers they are. Most of them usually have a list of books that they're currently reading. I mean, that's how their mind works. They can't even just read one book. They're in like 3 or 4 different books at a time. And then they got a waiting list of books that they want to read, they want to consume, they want to get that knowledge bound up in that book inside of themselves so that it can become a part of who they are. And you got to be careful what you allow in. So make sure, that the stuff you're reading, the stuff you're studying, bears the light of day, His light, okay? God calls prepared people, so make sure you prepare yourself. The Bible says, tune your ears to wisdom and concentrate on understanding. Cry out for insight and ask for understanding. Search for them as you would for silver. Then you will understand what is right, just, and fair, and you will know the right way to go. For wisdom will enter your heart, and knowledge will fill you with joy. Proverbs 2:2 through 10. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928 and consult with a licensed securities broker or financial planner before making any investment decision.